Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session once again with you. And I'm going to discuss a number of points with you, as you would have looked at the thumbnail. So, I'm going to discuss about the five major mistakes that retail investors, in my opinion, do while investing into the market. So, we did talk about traders last time around. I'm going to talk about investors today. Got a good response for that video. And then at the end of this live session, as the sixth point, and that is the major point in my opinion, that the retail investors become faulty on. So I'll discuss that also. So these are 5 to 6 points, and the last one is the most important one. So kindly watch the videos till the end. Apart from that, I'll discuss about the markets, and I did start a poll yesterday or a day before, in order to understand as to what you all think about the market, where it is headed. So kindly take that poll. I would love to hear from you in the next 1 week as to what you feel. Probably I'll discuss that poll also on Thursday. So in the next 2 3 days, take that poll on where the market is headed, whether 13,500 will come first or 15,500. With 2.6 lakh cases today, it looks like the former. Uh, but we'll see how things go about. So about the markets, I'll discuss about the markets a little bit for 2 3 minutes, and then probably more people will join in, and I'll discuss about these 5 6 points that I have jotted down, which I believe are major mistakes of a retail investor. Uh, Basically speaking, the market has been very resilient, even with the kind of situation we are facing here in India. 3x number of cases per day reported than what they were in September. And I would not be surprised if from tomorrow onwards there is some sort of selling in the market. I'm not saying that you panic and sell, but there could be 1,000 point decline in the market. I still believe from here on in, and those will be very good levels to get into. So the markets were at 14,600. Major support is around 14,200, 250, and once that goes, so you need to understand the range as far as my technical understanding goes, and you might be understanding more than me at this point of time. 14,250 to 14,850 is the broader range, 600 point range. Once that gets taken out, I won't be surprised if we go down another 600 points. So we are looking at 13,600 on the Nifty. Because of the kind of situation on the ground, there is no lockdown, yes, that's for sure, but the condition is perhaps virtually the same. So today is a Sunday. Even Uttarakhand here, where I am living, it is completely shut down. We have Delhi shut down. We have Maharashtra shut down. We have Jharkhand shut down. Madhya Pradesh down, and it could just increase. I hope not. This could just probably escalate whatever the situation is. So not a lockdown, but this seems like a very difficult phase, more than what we saw in May, June, July of last year. So in that case, I won't say that 7,500 will come, but a good 7 to 8% fall in the market, 5 to 8% fall in the market in the Nifty is very much possible, and 12 to 15 or 10 to 12% decline in the mid and small cap is very much possible, and those will be very good buying opportunities. I mean, at 13,600, 500, 13,000, in those levels, very good buying opportunities. A second scenario, and I fear that, but there could be a situation if this really escalates big time, we could even see 10,700 on the Nifty. But that's just about it. I'm sorry. So that's just about it. But for the time being, let's stick with 13,500 as our targets. But if things really escalate, then 10,800 is the next target if that gets taken out. But those will be strong buying opportunities, both. And somebody who can have cash and buy at those levels can really make a lot of money, say 1 year down the line, probably by next Diwali, not this one, but next Diwali, 1.5 years. you could again see surges in the range of 2 to 3x in your stock prices. Very good stocks. I mean, those mid and small cap, not very small cap, but larger mid cap stocks could go to 3x from those levels. So wait for further decline, wait for, you can say, abysmal levels, a lot of panic on the street, and then go ahead and buy your favorite stocks which you have always been planning to buy. All right, guys. So I'll discuss about those 5 6 points, and thanks a lot for supporting me. Kindly do support me here. Support me on Patreon and become a member there. If you pay $100 upfront, you get a 12-month subscription, so 2 months extra. So kindly do that. So let's begin with the 5 points that I have made, and the last one I'll discuss after those 5 points. The sixth point is perhaps the most important one, on which most of the retail investors who get into the market immediately make the mistake of. I've just noted it down on my phone. So first thing first, and this is the first thing I've wrote, and this is the mistake I used to do. So basically these 5 6 mistakes I have gone through when I started my investment journey in 2011 October November. So this is what I have gone through while investing into the market. Buying low market cap companies, they will become multi baggers. No, so buy as low market cap company as possible, 100 crores, 200 crores, 50 crores, and those companies will become multi-bagger rather than buying a 10,000 crore market cap company that could become 10x. We look for 100 crore market cap company that could go 50 100x over 10 years, and we will hold for 10 years, and it will do this, it will do that, it will have sales of this type in 4 years time, it will have sales of this time in 8 years time, and then nothing fructifies. The stock market falls, the stock falls, and you exit at 20% loss. So rather than buying low market cap company, what needs to be done? So this is a fallacy. This is a misconception that only low market cap or micro cap companies can become multi-baggers, and that's why you need to invest in them, and then only those can become 10, 20, 30x. What you need to do is look for projections, look for stocks which could give you 25, 30% CAGR over 3, 4, 5 years. If you can find those, no matter what the market cap is, you will gain traction and the stocks will go up 2 3 4x over the next 3 4 years. And if there is some kind of tailwind, then you may get a 7 8x. So your first target being an investor in the market, and these are for those who are new to the market, who are probably a couple of years into the market, is to look for companies which can generate a lot of, you can say, ROE, which can generate a lot of profits over the next 3 to 4 years. Just to give you an example, so an example would be Dixon Technology, that I had been bullish on for the last couple of years. Now it has run up a lot. So Dixon, me and my friend, and we were so bullish because it was trading at 1 time sales, and we thought that it should trade at least 3 times sales. So we bought at that point of time, did not stay with it a lot. So sold it off probably just in a bit of profit, but we bought it somewhere around 500 550 rupees and stick with it. And today the price is around 3500 or so. This has been after 4 years. So after 4 years the stock is 6 7x. Why that has happened? Because it has gone from 1 time sales to right now probably having sales of what, around 11,000 crores they are hoping for in the next year. So three and a half time sales. So from 1 time sales to 3.5 time sales, the profits have surged, and that's how the stock really moves. So we looked for 3 4x, and it became an 8x. So you need to look for companies which can generate. So even at that point of time, the management was confident of making 24 25% CAGR. uh, you see that the company did not do 24 25% CAGR. Over the last 3 years they have done something like 35% CAGR, 30 35%. So that's how the stock really surprises you and make you money. So rather than buying, so at that point of time, the company was what, around 3,000 crore market cap, if I'm not wrong, somewhere around that, 3 4,000 crore. It was not a 200 crore market cap or a 100 crore market cap company. So don't look for a lower market cap company, look for growth. That's the first mistake that you do. Second thing is copying large investors portfolio. Now I have done that. 8 9 years back to buy some stocks that Mr. Rakesh Jhunjhunwala has bought, and probably yes, that will go up. So my wealth will also go up. But then the problem began because the stock started to fall, time started to go by, and I used to, at that point of time in 2011, 12, 13, there were only IT and pharma doing well. There was only IT and pharma doing well, and I was into AIA engineering. I can just disclose that I was into some other engineering firm. I don't even remember. So some construction engineering firm, etc. And that was going nowhere, or at least going down. So eventually, I have to sell at loss and looked at what can make me a little bit of profit, because my investment was very less compared to what the big bull was having. So you need to understand your risk appetite and then take a call, rather than buying into something that large investor has bought into, because you don't know the time frame, you don't know how long they are going to hold, you don't know what their mindset is with respect to investment, and you just copy them, and you are not able to hold the stock over that period of time. In one of the interviews, Mr. Rakesh Jhunjhunwala has talked about Lupin. The stock did not perform whatsoever for 4 5 years from 2001 to 5, and after that the performance began from 2006. And he has held on to the stock, although he sold some stake, but he has held on to the stock for the last 15, 18, 20 years, and now is making a lot of wealth on it. At that point of time, the company was only about less than 1,000 crores. So that is the kind of patience you should be having in many of the stocks he's having. Unless you have that, if you have that, well and good. But if you don't have that, then you need to devise your own way of investment, and your way of investment will be the best for you. And that is why time in the market is extremely important rather than copying someone else. The third in this list that I have written is buying in a rush and not waiting for any declines or whatsoever. So you have found out a stock, you believe that it is very good, you believe that it can over 5 6 years can become 6x, 8x, 10x. But at this point of time, it has already gone up from 100 rupees to 350 rupees, and you want to buy immediately, and you buy immediately. That is where the problem occurs. So say for example in Kilpest from 70, so in my case I was holding from 70, and for a year and a half didn't do anything. You buy the stock when it goes up 5x at 350, 360. Then it goes to 540, you still hold it 520, and now it is back to 330, 340. You're not making any money. 1 year has passed by. That is where you need to be shrewd and understand that okay, decline. So the stock did go to 272, the stock did go to 280, then again to 300. You could have accumulated at those times, or even at these times, and have a time frame. So you cannot say that okay, this stock is at 350 from 100, and this will be 2000 in 6 months, so let's buy now. And after 6 months you see the stock is still at 350, and you just lose hope and you sell, and before you know it, after 6 months of you selling it, the stock is at 700, and after 2 years you sell it, it's at 2000. So you need to have very clear idea where the stock could be, what could be the numbers, what could be the thesis behind the numbers. Only then you go ahead and buy. Just do not just follow the price chart and it is up 3 4x and the company is good, let's buy it, it will be big. Don't go by that. Stock prices and stock and company is totally different. So just attached to this point is one example of future consumer, which has the Big Bazaar name. So Big Bazaar is big and sells a lot, and a lot of sales happen. But you look at what the stock is or what the company is doing with a lot of debt, etc. And I have made that mistake in 2014, 15, 16. After making money on it from 25 to 75, I've lost money on it by buying at 60 or 55 and selling at 27. So lost 50%. And the mistake I did was to understand that okay, they're selling big in Big Bazaar, they're selling big at in other stores, and they're expanding and doing all the things. They will come into profitability and do a lot of things, but that doesn't happen. So you cannot buy big brands. I'm just attaching the point to it, that you cannot buy big brands at high level and understand that okay, this will have so much sales, so much profitability, so let's invest into the company and it will become big. Another example is Kaya. So Kaya has not done anything. On the bottom line, there's no profitability. Okay, the next point I have written here is oversighting for more than you can fathom, 10 years, 20 years. And that comes to me from the fact that a lot of people ask me about renewable energy. A lot of people ask me about people shifting to solar energy and so on and so forth. I have been hearing about it and reading about it, hearing for the last 10 years. And I've read about articles of this sort for the last 20 years. Even 2000 people talk about it. When the Enron thing happened in US in 2001, people were talking about it. Even today, people are talking about it. And there could be surges. So people are looking at Tata Power, people are looking at Suntech Reality, people are looking at many other companies which are into some sort of renewable energy, the power companies into it, and so on and so forth. Yes, it could very well materialize. I'm not saying that. It could very well materialize electric vehicles, everything, and your only Tata Chemicals will be the stock and all over the next 5 6 years. But what is the current situation? You need to look at that. So if I look at the current situation, I have 5 lakh rupees or 2 lakh rupees with me. Will I go with a stock in which I would hope that okay, things will change, people will have solar panels, etc. So let's buy those. Or will I look for a situation where I know that, for instance, Dixon is going to have 11,000 crore next year sales, 22,000 crores after that, 40,000 crores in 4 years. So this sales figure of 6,000 crores will become 42,000 crores in 4 years. The sales are going to go 7x. So the numbers are going to escalate. So let's buy a Dixon at 20,000 crores rather than buying any company, say a Borosil, even people are liking about writing about it at less than 1,000 crores. So you need to have an idea. I would rather go with a Dixon if I have an idea of a vision of what kind of sales can happen in the next 3 4 years, rather than sitting on something in which probably things will materialize after 4 years and results will come after 7 to 8 years. So another example is I think the stock Dr. Reddy's, in which the Sputnik vaccine thing is there and everything. I mean, the vaccine, etc., would come in 2 to 3 months' time. So their revenue would come in probably, this is April, so probably in May, June, July, maybe in the September quarter. So I think there will be surges in this stock, and then the stock will come back. So that is my point. So you need to have rational. Being a retail investor, I know that it is extremely painful to just sit on that stock for 2 3 4 years, and then the stock will make you money. Those 4 years are gone. So that is opportunity cost lost. Thanks a lot. Thanks a lot, Vamsi, for your contribution. Thanks a lot for your accolades and your contribution through Super Chat. Thank you. So that's the fourth point I want to make. The fifth point here is not knowing when to sell and being attached to the stock. And this is extremely important. These last 2 points. So this is the fifth point, and then I'll talk about the last point. Uh, the fifth point is getting attached to a stock. So, for instance, any stock, let's give you an example of Manpasand Beverages because a scam has happened there, or Lloyd Electric now. Uh, if you go back and you look at Money Control, you look at other websites where there's a chatter going on about a stock and all, and if somehow you're able to take out the chatter of 2015 and 16 on Lloyd, and probably on Manpasand, say 3 years back into 2018, you'll understand that Manpasand people were talking about doing sales of similar sorts as Fruity. Then people were talking of Lloyd being such a big brand in AC, etc., and it will become huge because they are roping in large, uh, you can say brands for their advertising, etc. And the sales were coming through. Eventually, uh, both companies had a fraud, and we saw what happened. Just to give you say a simpler example, okay, there we had a fraud, etc. But if you look at autos, if you look at, so you need to understand that when to sell a stock. So if you buy for instance, for me, I give you example, and Patreon members know about it. So I bought so again, Kelpes, I'm sorry, I'm just repeating that stock because that has given me a lot of experience, and I'll give you another example along with that. So Kilpest bought at 70, held on to it. I thought, and we thought, as both of us, me and my friend, thought about it, that if somehow this could become even 300 crore market cap, that's 370, 380. That is something like, or 400 rupees, that is something like 5 6x from here. If that becomes in 3 to 4 years, I'm fine with it. Bought into 2019, early 2019. This thing happened, the pandemic in late 2019. No news from Kilpest about the kids, etc. In April, the news came out. In May or June, the stock was at 350 just before, or July, just before the results. And we sold. Yes, the stock went to 520, but we made our money. We made our money from say 85, 90 to 350, 360, whatever. And then we have got in again. So you need to have an idea. Suppose we did not sell. Suppose. So it went to 520, very good. Now at 360, we are not selling it. It went to 270. You lose time, and you lose that, you can say, you lose that money also in many of the occasions. So what happens is, so in something like future ventures, again future consumer comes to mind. 6 rupees stock in 2011, you can check the stock price chart of the last 10 years. 2011, 6 rupees. 2017, 72 rupees, a 12 bagger. If somebody had not sold, thought that this will be a 100 bagger for him, we are back to 6 rupees. So that is the thing, and the brand was very good at that point of time. People were talking of Big Bazaar and many other, you can say, brands they have taken into food and beverages and cleanliness, and I don't know, many clean mate, etc. There were many. So you need to understand what your targets are. Whatever you buy, what your targets are, whenever you buy. There has to be, every investor is a trader, every trader is a trader, everyone trades. Everyone has to eventually take out money. And you need to understand that. Otherwise, an investor will never make money. Those times, I believe, those times of 20-year investment are for those to buy into very large cap companies which could compound 18, 20, 22%. Your FMCG brand, your Asian Paints, Pidilite, etc. Those are the companies. But if you're buying into, I'm talking specifically about mid and small cap companies, if they surge a lot, you need to book profits in them. And now come my final point. Okay, this is extremely important. Buying something that is in loss, or buying something that is a story that could become big, well, very well become big, but has not become big, and will require a lot of external things. A lot of threats have to go away, a lot of opportunities they have to make use of. Only then the company will become big. And you're hoping that they will become big because it is in a sector, it is a smaller company in the same sector. And there lies the biggest problem. And the company is in losses. After what has happened with Kaya and Future Consumer, I have seen what has happened. I have decided not to buy anything which is in losses. Very rarely do I get into any company which is in losses for the last 2, 3, 4 quarters, unless there are losses because of an extraordinary, etc. Do not buy anything which is currently in losses and you believe, yes, for it will turn around, the turnaround story, as you call it. I don't believe in them. Yes, they do happen. You look at what happened with Tata Motors, you look at many of the other companies, but remember, autos, metals, etc., are all cyclical companies. The best way to buy them is when there is abysmality, there is a lot of distress in that industry. For example, Tata Steel was selling their uh, everything here, there, everywhere in 2013. The stock was at 150, 170 rupees or something like that. Those were the times to get into a Tata Steel or a Steel Authority, etc. These are the times to probably book profit. So those are cases of, you would say, cyclical stocks. But in consumer and other kind of stocks which grow every year, and like that, you buy into companies which are profitable. Don't buy into a consumer company. Yes, they are selling a lot, but it is not profitable, will become profitable. A prime example is Kaya, and large investors have got into it. There are no returns whatsoever for the last 3, 4, 5 years. The stock went up. I remember I have followed Kaya when it was Marico Kaya in 2011-12, made money while trading, lost money while trading. The stock went to 2000. The stock is at 300. And the business is very good. It's not making profits. Do not buy companies which do not make profit. And that was my biggest point out of these six points that I was making. Another thing I want to say here is about selling and selling strategy. That is the most important part, because if you don't sell, those profits are paper profits. If you don't sell, those losses are paper losses at that point of time, which could accentuate. So, giving you examples, and I've never talked about which companies I have talked about and went up, but just about 4 or 5 companies at least which I've talked about and gone up 8, 10, 15x. Tanla went from say 40 to 900, bought at 50, sold at 100. Some of my friends sold at 150, 200. Yes, it went to 900. So be it. But you have to put up like at which prices you're happy selling at and which prices you're happy making money with. Dixon Technology, the stock has gone from 5 600 to 4400 after split, but has come down. So if you don't sell, suppose Dixon doesn't make a lot of profits, it is making 80 90% for the last 2 3 years. 80% profit growth, 70% profit growth. It comes down to 20% profit growth, the PE will reduce. The PE is currently 120 130, will reduce to 60. The stock price will halve, and you'll keep waiting, and that is why it's very important to buy. So Dixon from 500 to 4400, Kilpes from 70 to 500, sold at 350. Better to sell midway through whenever you're comfortable that okay, you're making decent money, let's sell. Don't worry about the time frame, etc. You can still buy later and sit on it. So like I have done, I bought again into Kilpest, and I'll sit on it for 2 3 4 years. I made my money, can sit on it. But if you don't make money first time on the stock, so if you, for example, don't sell a Dixon buying at 500 at 3000 or 2000, then you're in trouble, because at 4500 the stock may very well reverse. No stock can go up forever, no stock can go down forever. Hindustan Foods, it has gone up something like 10 20x 15x, I don't know. From the time I made the video, the stock was at 4 500 rupees, at 2000 rupees at the moment. And of course Extel Industries from 80 90 rupees all the way to 400, and now consolidating. And then you have other stocks as well, something like Acrescel. Uh, there are many. So in smaller companies, always try to book out once. Make a target of 3 4x. If it becomes a three bagger, I'll book out, and then look at it again when it consolidates, it goes down. Look at it again, buy for a longer period of time, because your 4x will not be made so easily unless it is a Ruchi Soya, etc. Very few companies do that. So these are my points. I hope you like this video. Investors are also traders. That's my point. Kindly write your, you can say, point of view on that, that whether investors are traders or not. So I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help me grow the channel, help you also ask me questions and eke out answers in greater detail. And also support me on Patreon. Go to the link. The link will be in the description. Kindly do support me there as well. Okay, invested in escorts at 5,000 loss. Don't worry, I think escorts should head towards 1350, 1400. Keep a stop loss at 1200 on escorts. SL Propac is a good company. Again, year and a half is a good time frame at SL Propac. Don't hold for longer than that. Uh, Orient Electric is good. I don't know about Orient Cement, which Orient you're asking, but Orient Electric for long term is decent company. Nestle at these levels look attractive. Any declines can be bought into. You can see 15 to 18% CAGR on Nestle for sure. Uh, Okay, Daiichi Karkatya Cement, I know. That is good. Daiichi Chemicals is also a decent company. Again, these companies try to be a little bit shrewd, wait for distress in the market to buy, so that your risk is safe and you have a good risk reward ratio. SBI Life is a portfolio stock, just like Nestle. Keep accumulating and just hold for a decade. It would give you very good return. NBCC, I would say we hold if you have, and if you don't have, wait for declines. I think if the market declines, NBCC could go below 40. So wait for those levels as well. L&T Infotech around 3600 would be extremely attractive. Very good stock to buy. Avoid Brightcom, again a case where losses and the stock is there, so don't buy. I have just talked about it. Glenmark has surged, probably buy with a 10% stop loss, and if it keeps moving up, book your profits. I think for investment, these are not good levels to buy into pharma. Wait for major declines to buy into pharma if you like to buy for investments. Avoid IRFC, that would be my opinion. Coforge is a good stock for long term and at 2800, 2900, not at these levels. That's my point. Tata Elxsi again after results may consolidate and then you can look at it, not at these levels. Now Astral Poly looks attractive, but I think there could be another you can say move towards 1450, 1500, and that will be the time to accumulate. I think it has surged, but with the kind of cases we are having, we could see a decline in the market, and that is where you buy. Sequent Scientific is a good stock from a 3 4 year perspective. Buy around 230 225. Uh, Thanks a lot, Samuk, for your contribution. HLE glass code bought at 1400 levels. I think if you have a short term point of view, then sell. If you have slightly longer, say 2 to 4 years, then probably buy more on declines. Wait for declines to 1100 and buy more. That would be my opinion. Praj Industries looks expensive at these levels. That would be my point. Okay, make money organic. See, I have not liked the company, but there have been many issues that have happened earlier with the company, so I just avoid it. Although the companies are producing decent results, that would be my call. Godrej Properties is a very good company. On declines can be bought into. Wait for market decline of 800,000 points and then get into Godrej Properties. Again, same thing with Lakshmi Organics. On major declines can be bought into. A Bata at very attractive levels. If you have a 3 to 5 year time frame, you can buy at these levels. I think next 2 years, 1.5 year could be difficult with the pandemic for Bata. You can get it around 1050 as well. I think there could be another round of selling in Bata, but keep adding at these levels. All right, guys. Thank you. Thanks a lot for being online. And I'm sorry I've answered less queries because the session has gone on with me explaining points for investors. But next time around, I'll take up more queries. Thank you.